More doubts on the recovery in Japan. The export slump deepening. Overseas shipments dropping a more than expected 40% in the month of May. Our Asian economic editor, David Tweed in Tokyo, has more on the rot that will not stop. David, any sign of any silver lining in the numbers that we're seeing today? I don't think so. We were both shaking our heads when the news broke earlier.
Well, we were earlier, but if you look at that bar chart of the decline in Japan, you can see that the deterioration in total exports has fallen. I mean, look back in February at that 49% drop. We're looking at a 41% drop now. So there is an improvement, and that pretty much jibes with what we're hearing from the Bank of Japan and also the government, who've both raised their assessments of the economy, saying that the deterioration has probably stopped. That said, they're not exactly saying that the outlook's got a lot better. One of the things, though, I think is a cause of concern, Bernie, and that's the shipments to Asia. We saw that the declines in the shipments to Asia, they weakened for the first time since January, and in particular, it's the deterioration of the exports to China that might stand out. The exports to China dropped 30% in the last month versus 26% drop in April, and now that might be a problem because China's been a beacon of hope. You remember the stimulus package, $585 billion stimulus package. There was some hope that that package would offset the drop in demand to the US and Europe. And we've seen that also in some comments coming from Japanese companies. Hitachi Construction Machinery said this month that its sales of digging equipment to China hadn't improved as much as it anticipated. Another area of concern is just the recent publicity we've heard from the Chinese National Development and Reform Commission, which has been urging local governments there to just buy Chinese goods when available. So that could be a concern for Chinese exports going forward. Robert Pryor-Wandsworth, he's an economist at HSBC, however, he says it's probably too early to start panicking and draw a conclusion that demand from China isn't going to help revive Japan's exports. Now, just turning to the US and Europe, both those markets still looking pretty bleak, although they're not getting any better or any worse. Exports there down about 45% to both markets on the month. That said, it doesn't augur that well for the recovery. We will see an increase in industrial production probably in Japan, but that's because of the inventory build-up. It's still difficult to say that we're going to see some global recovery in exports until the recession is over in those parts of the world that are the most important for Japan's shipments abroad, Bernie.
Okay, not just the export side, but the Japanese just aren't buying as much either, with the imports down a similar quantum as well. So, double troubles, is that what we got on our hands? Let's head over to Ed Murner, president at Atlantis Investment Research, and put a question or two on this issue to him. Ed, they were hoping that the Chinese could pick up the slack where the Western countries weren't buying. It's not happening, as David was just telling us about. This sounds like a double whammy of double troubles for the economy there.
Well, I think you have to also remember that you're looking at the May figures, and May was Golden Week. So that means a lot of holidays, a lot of factories were closed down. So it isn't really, I think probably the real slackness was greater than expected, but we'd had on a month-to-month basis, we'd seen recovery for several months, and then it kind of went down a little bit month on month this last month. But I think the recovery in exports, or the bottoming out in exports, is still in place. So I'm not too worried. And as you said before, 1 month doesn't make a trend.
Edwin, David here, I was just wondering, given that outlook you've got there, are there some exporters that you're actually adding to your portfolio at the moment?
Well, remember, a lot of the exporters are companies that ship over, let's say, to China or to other places. They ship parts or whatever, which are used in products which are then assembled and then shipped to the United States or Europe. Yeah, I have some exporters in my portfolio, and they look much better than they did, let's say, 3-4 months ago. And they tell me that the bottom really came in January, February, and they've been going up since then, especially in electrical parts. Auto parts may not be recovering so quickly, but for electrical parts, it looks much better.
Ed, we're going to be picking apart some of your, and I should point out that Atlantis likes to really take most of the gist of their approach is bottom up. In fact, 3/4 is really company visits and really crunching the numbers, doing the elbow grease kind of thing to suss out where they think there is value in the market. Do want to ask you, though, with the yen where it is right now, that continues to be a real drag on a lot of these companies. Ed, have they learned how to adjust to this, or is that going to be an ongoing problem that's going to take them 1, 2, maybe even more quarters to reckon with?
Well, with demand slowing down, companies across the board are trying to cut their costs. And of course, a stronger yen is not good, it's negative. But at this yen rate, it's still okay. I wouldn't say it's good, but it's okay. But if the yen starts to get to around 90, 89, that would be quite bad. But over time, Japan can adjust. Remember, it wasn't 30 years ago the yen rate was 360 to the dollar. So companies have adjusted.
Mm-hmm. Are we going to get to 89, 90? Do you think that's in the cards, or do you think that's probably a pretty offbeat assumption?
It's possible. I would say probably the low 90s is more likely. I think 90 to 100 is okay for most Japanese exporters, but if you drop much below 90, then it takes a lot of time to adjust. I mean, if the strong yen happens gradually, companies can adjust. But if it happens suddenly, then it's impossible to adjust right away.
Okay.